Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar bullish sentiment continues as the bulls soldier on and now move closer to its objective, which is seen around 64.45. A break here would give further exposure and a trajectory to 65 to 66 cents against the greenback. In economic data, according to the latest release from the Australian Bureau of Statistics, Australian inflation hit its highest peak since 32 years ago. The CPI, or the Consumer Price Index, for the third quarter printed around 7.3%, higher than the forecast of 7%, and the prior release was at 6.1 annually. Also, the quarterly inflation rate inked in 1.8% raise, that is, from a forecast of 1.5. It is assessed that the market now may have reinforced the hawkish case for the Reserve Bank to lift its interest rates next week on Melbourne Cup Day. A bigger than projection rate hike of 50% could be now on the cards after the RBA hiked official rates previous month in October of 25 base points. In light of the pattern, though, this potential strength that's come in from the candle since the engulfing candle, that is, and would get confirmation if we see a break of 64.45. With the euro now clearing the topside resistance level of 99 figure 35, promotes a trajectory target of 101 to 103. But I would say that the dollar index, which measures the greenback strength against a basket of 6 major currencies, still holds within the upward channel, and therefore keep an eye on the region around 109.80. This could be very devastating for the US dollar and see a plummet back towards the 107 region, and this would help or fuel the rally for euro, as it is weighted against the US dollar at 57.6 to the index. Well, there is a weaker play coming into the dollar yen as the market now slowly treads carefully after the wild volatile swings that we saw earlier on Friday and Monday. Also, the investors now looking towards the interest rate decision by the Bank of Japan this Thursday, and is no doubt likely to see rates remain on hold at negative 0.1. Nevertheless, keep an eye on the statement because it could be a little bit more revealing of how the Bank of Japan is feeling with its ultra-loose monetary policy. In light of the pattern, we could see a slide towards 146.85 and a base beneath that holds around 145 to 143 area. The stronger stance for sterling now looks towards a challenge of 114.95, and a break there will give further scope up towards 118 as a potential target. Technicals are bullish and therefore does support for the break. Let's see if we can get it into the European session, and if so, fuels the next step towards the 115.80 to 116.70. Slightly mixed pattern for gold when it comes to the ranges of 1,638 to 1,666, as we've seen two rejections, and also the engulfing candle, however, is keeping the market afloat to the upside case, and a break above 1,666 gives us a target around 1,690. Until we get the break of 38, the upside focus on 66 will continue. Finishing off with oil, the market continues to trade sideways beneath the 85 barrel handle, and therefore waiting for a direction that could be somewhat negative. I feel that the technicals are breaking down and therefore could be looking back towards $81 a barrel. That wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great day ahead.